Hello, welcome back. And today I'm going to go over why all the mortgage rates forecasters of all the major players their predictions are already wrong for the 2025 mortgage rate forecast. And I'm going to tell you why on a deep dive. Sit tight and just watch my information and let me share this particular article by Housing Wire, and that was produced several days ago, December the 19th, 2024. So the headline is all those 2025 mortgage rates forecasts are now wrong. And even before we have entered 2025 as we speak. So Housing Wire have produced this particular article, and the main lead analyst for Housing Wire, they provide some very up-to-date sources in housing news on a daily basis. And the head analyst is Logan Marashani. I pretty much respect this guy quite a bit. So let's dive deep as to what he has to say and his team from Housing Wire, including Mike Simonson from Altos Research, his partner, and why they believe, the Housing Wire believe, that all these experts organizations out there has predicted wrong already. So as we move into December, almost the year is over, 2024, all the forecasts have been published, and unfortunately, all of them are already wrong. The most optimistic predictions assume 2025 will see mostly low 6% for the 30-year fixed rate mortgage. And yet, with pesky inflation data not falling as quickly as expected, Fed Chair Jerome Powell suddenly changed his language in the Fed meeting on December 19th. The bond market got spooked and mortgage rates jumped back to over 7%. Now, all these rate cuts by the Fed does not necessarily mean that the mortgage rate will correspondingly will go down. It's not a direct correlation, because the mortgage rates are impacted mostly by the 10-year Treasury bond, which I will go over throughout the remaining of this particular video. Furthermore, it's notable that 2025 is about to start with a mortgage rate in the 7, right? At, at the moment of this recording, I believe the mortgage, according to Mortgage News Daily, the mortgage rate as of the third week of December, right before Christmas, is around 7.1, 7.2%. Anyway, most forecasters got the mortgage trends for 2024 wrong. So they forecast around 6% or lower by now. Unfortunately, for home buyers in 2024, mortgage rates have stayed higher for longer than anyone expected. Mortgage rates, as tracked by Freddie Mac, averaged 6.72% across the calendar year 2024. Look at the calendar year 2024 right here, right? At the rate of actually November 2023 at 7.5%, 30-year fixed rate conforming mortgage. Then it dipped down to January 19, 2024 to 6.6%. Then it went back up. That's just going to show you the volatility of the mortgage rate throughout to 2024. Then May the 3rd of this year, 2024, the rate jumped back up to 7.22%. Then from May all the way down to September, May, June, July, August, the next 5 months, the mortgage rate has gone down all the way down on to 6.0 back in September 20th of this year, 2024. And everybody was thinking, oh, including myself, would go, wow, if it's 6.09%, 6.1%, it may go below that. It might go to 5.9, 5.8%. Then all hell will break loose. Then the floodgate will open with everybody qualified to re-enter the housing market again. But then this teaser, I call it rate, it just teased everybody. Then for only a few days later, from September to October to all the way to November last month, the rate went back from 6.1% to 6.84%. Then everybody got disappointed, or this kind of signals, this kind of volatility is impacting a lot of potential home buyers out there. It's very disappointing news, the up and down the roller coaster of the mortgage rate back throughout this year, 2024. Then the rate have gone back down to 6.6% December 13th, a few weeks ago now. Then went back up for the following from December 16th to December 20th at the date of this recording. We're talking just a few days later, the rate went back up to 7.1% as we head toward the end of this year, 2024. So, yeah. Anyway, for the most part, forecasters seem convinced that rates will stay elevated for 2025. So that's what's happening. Okay. So all those experts out there, they have revised their mortgage rate projection for 2025. I'll show you the details momentarily. So here's the consensus view of mortgage rates for 2025. With recent inflation news and the Fed's expressing less confidence in rate cut in 2025. By the way, in case you have not heard, the rate cut projection for 2025 will be only 2 rate cuts by the Federal Reserve, all right? Instead of early this year, people are projecting it'll be 4 or 5 rate cuts for 2025. No, that's not happening. Only about 2 rate cuts are expected for 2025. So therefore, the momentum is for higher mortgage rates into the new year, 2025. So anyway, so let's go through the various players in this game, the so-called experts organizations out there. The economics team of NAR, National Association of Realtors, for example, has stated assumptions of near 6% for the year, quote unquote, near 6%. What? Is it mid 6%, whatever? So they've been very vague about it. And then Goldman Sachs says the rate for 2025 could be above 6%. Wow. There's nothing precise about that. Above 6%. How much above 6%? 30 basis point, 300 basis point, 800 basis point. What is it? They've been spooked. Anyway, the economics team at Zillow expects rates, quote, to be lower at the end of the year, end quote, with plenty of bumps in the path. Wow. All these organizations are being so vague. They don't want their projection to come back to haunt them. It will destroy their reputation as a mortgage forecaster from these organizations. While still others, such as those from Realtor.com, discuss an average for the year of 6.3% in 2025, ending the year at 6.2%. Yeah, share in the comments what do you think about all these forecasters out there, whether they are in the ballpark or they're totally wrong. And I will share with some of you guys with some of my opinions as well. So 2025 mortgage rate forecast. Housing Wire, again, has interpreted the low, average, high from these company statements. And the players have made this podcast or they're the usual contenders. Redfin, Housing Wire, Goldman Sachs, MBA, a Mortgage Banker Association, Fannie Mae, Wells Fargo, Bright MLS, National Association of Home Builders, Realtors.com, First American, and National Association of Realtors. So here are the spread from their revised prediction for 2025. Redfin as low as 6.2, as high as 7.2, with the average of 6.5 or 6.6 for 2025. Housing Wire, which is the author of this particular article, shows as low as 5.75% for 2025, as high as 7.25. So their spreads are a wider range than the other companies' forecasters. So if the average of 6.2, I'm not going to go through too much detail, but the average Housing Wire add up the low and the high and divide by 2 and equals the average. So 2035. Okay, let me go to the average. Redfin 6.8 average for the year 2025. Housing Wire 6.6, Goldman Sachs 6.5, MBA 6.5, Fannie Mae 6.45, Wells Fargo 6.41 average, and HB 6.36, Realtor.com 6.3 average, First American 6.25, and NAR 6%. So everybody in the 6% range, nobody's predicting lower than 6% range except Housing higher at 5.75% at the lowest point. So the housing wire forecast for mortgage rate in 2025, like I said, is a range between 5.75% and 7.25%. So the low range, why housing wire predict the low range? What has to happen in order to get below 6% according to housing wire? And right here it says the for mortgage rate to spend the year near 6% or lower, that assumes easing inflation and softer job numbers. That means we want, I hate to say this, but they want the labor market to get worse, to soften in order for the mortgage rate to come down, right? Because of the effects of 10-year Treasury. The economy has to be cool off in order for rates to ease lower. That means the economy has got to be worse. There will be more chaos. Unemployment rate is moving higher. Economy not doing well. Then the mortgage rate should drop lower. All right. So the low end of the forecast range also could affect from decreasing mortgage spreads. Now, here's the technicalities many people do not understand. The relationship between the federal rate cut versus the mortgage rate. There's very little direct correlation. It's all about the 10-year Treasury. So here are the details. The low end of the forecast range could also benefit from decreasing mortgage spread. Okay. The risk premium difference between the 30-year fixed rate mortgage and the yield on the 10-year Treasury bond. Okay, so Housing Wire, their forecast range of 5.75% on the low end is a scenario where the yield on the 10-year drops to a recent as low as 3.5%. So the high end of the range, according to Riffin, their expectation is for an average of 6.8%, which is very pessimistic, okay, on the 30-year fixed rate mortgage of 2025. Yeah, Riffin being very pessimistic about the rate range. Housing Wire, the upper end of the forecast assume that the mortgage rate could spend sometime above 7% in 2025, possibly as high as 7.25%. The 7.25%, in my estimation, means that the labor market is very strong. The unemployment rate is very low and the economy is doing very well, right? So if all this scenario continue to happen in 2025, then we will see a much higher mortgage rate above 7%. Okay? And in summary, according to Housing Wire, expecting the unexpected. The volatility will continue to occur. Recent events show how quickly any news can evaporate. 2025 promises to be a bumpy ride. Here's my takeaway, right? If the mortgage rate are projected to be in the mid 6% or low 6% or high 6% throughout 2025, so the housing appreciation projection is going to be anywhere from 2 to 5%, according to the very same organization, which I just showed you. Yeah, so 2025 will be pretty much the same as 2024. We will see like a very stabilized market. If the mortgage rate comes down below 6% for 2025, we will see more demand, more surge. The floodgate will open. There'll be many more buyers that can afford these rates, and that will really increase the bidding war and multiple offer situation because the supply is still very limited in the nationwide housing market. There's a lack of inventory. Economics 101, supply versus demand. It's pretty easy for demand to surge if the mortgage rate come down 50 basis point to 5.7%. Then we see a tremendous uptick of surge of home buyers getting off the sidelines. But if the mortgage rate could remain in a 6% range, what we'll see in 2025, no different than what we'll see in 2024. We can see some kind of a balance in the market, some kind of healthy market, if you will, with a monthly supply of 4 to 5%, which is still a somewhat of a buyer's market. We will see, in my estimation, there will still could be a lock-in effect. A lot of buyers are locked into the low historical mortgage rate at 2 to 3 or 4%, and there's no way they could sell their home and become a move-up buyer at a 6.5% mortgage rate. They're not going to do that. They will stay put. Unless the mortgage rate comes down below 6%, you're going to see a lot of the lock-in effect still could continue. And we're going to see some, healthy market, if you will. So that's my takeaway. So share with us what is your comment, whether the projection is correct or not. What do you think about the housing market? Again, I don't see any kind of correction. We still any kind of housing crash whatsoever because we still a lot of homeowners still have a lot of equity, a historical equity position that they have. So they are dictating the housing market, the sellers, the owners of those mortgages, right? So share with me or put down in the comment below. What are your thoughts about my information I just shared with you? And I'll be more than happy to address some of your comments. If you receive any kind of value whatsoever from this video, please like and subscribe to my channel. And also put your email down on my website below so you can become our free member of our real estate investment network. By becoming a free member, with your email, you can input, you will receive email newsletters about real estate investing opportunities that can help you to achieve your financial goals. All right. Thank you so much for watching and listening. And I will see you on the next video. Have a nice day. Bye-bye.